Okay, let's unpack this. Today we're doing a deep dive into the very latest expert outlook on the Korean financial markets. We're covering stocks and real estate too. Our mission for you, really just to cut through all the noise, get to the core insights. Where might capital be moving? What are the specific conditions experts see as key for growth? And these insights, they're drawn from a pretty recent event. Money Trend 2025 happened July 16th. Featured some top 20 experts, and we mean the practical financial gurus here.
Yeah, and what's fascinating really is the consensus that came out of that event on the 16th. The KOSPI index, it's already broken through 3,200 points, right? After President Lee Jae-myung's inauguration. But these experts, they're predicting the Korean stock market's relative return. It'll actually be higher than the U.S. markets this year. And they see KOSPI continuing that upward trend right into the second half of 2025.
Okay, 3,200 is a significant jump, definitely. But keeping that momentum going, that's the challenge, isn't it? Did the experts talk about any cautions, or what did they flag as the absolutely critical thing, maybe a hurdle for the next big leap?
Right. Well, the focus is squarely on what they called follow-up measures. Specifically, it boils down to easing inheritance and gift taxes for major shareholders, company owners.
Ah, the tax angle. Why does that matter so much for the overall market?
Well, Min Jae-ki, he's a manager at KB Securities Prime Club. He was very clear on this. He basically said these kind of excessive inheritance and gift taxes are problems that artificially depress stock prices.
How so?
Well, think about it, right? If you're a major shareholder facing a huge tax bill down the line, you might keep valuations low, maybe limit dividends, or even sell off big chunks of shares preemptively. That affects market perception, liquidity for everyone. It's a drag. He believes pretty strongly that if these issues are definitively resolved, like properly fixed, you could see a rapid market reevaluation. KOSPI could actually perform, comparably to the S&P 500. He really stressed it. You need concrete results, both in shareholder returns and sorting out these inheritance and gift tax issues. That's what's needed for KOSPI to get like a full stage beyond 3,200.
Okay, so it's not just market forces. It's very much about specific policy actions. Adds a layer of complexity, definitely. Given those conditions, what about actual predictions? Any specific numbers from other experts? Were they just as bullish?
Oh, absolutely. Yum Song Hwan, he's director of Ella Securities Retail Business Division, gave a really sharp analysis. He gets the concern, people worry about a big drop if stocks rise too fast. But he argues, given the government policy stance and the liquidity in the market, this bullish trend isn't going to break easily.
So he's confident.
Very. He confidently forecasted KOSPI 3,400 is, and I quote, easily achievable.
Easily achievable.
Yeah. And even KOSPI 4,000, he said it's not strange, especially if you look back at past market highs. His conviction really comes from that mixed government support, plus just the sheer amount of money sloshing around.
Okay, KOSPI 4,000, that is a bold prediction. So, okay, what does this all mean for, where you might look for opportunities? Which sectors are the experts buzzing about for the rest of 2025?
They highlighted several key areas. You've got the Jobang 1 sectors. That's the popular nickname for shipbuilding, defense, and nuclear power. They've been leading already this year.
Right, the Jobang 1.
Yeah. But beyond those, they also pointed towards securities, bio, definitely artificial intelligence, AI, and semiconductors. Those are hot areas to watch.
Interesting. So kind of a mix of traditional heavy hitters and the newer tech frontiers.
Exactly. A pretty diverse set of potential opportunities.
Okay, let's shift gears a bit. Moving from the potential excitement in stocks to a market often described as frozen, real estate. Stock market looking up, maybe, but the real estate scene is definitely feeling the chill, right, from those 627 measures. Experts were noting, I think, a big slowdown in transactions, like a waiting game.
Yeah, that's right. But if we connect this to the bigger picture, it's actually fascinating how this seemingly negative situation, this freeze in the general market, can actually create a unique opportunity, particularly if you're someone looking for, my own home through auctions.
Wait, how does that work? A frozen market creating opportunity.
Yeah.
Especially in auctions. Sounds like it would be even tougher or, riskier.
Well, it's counterintuitive, but it's all about a really significant shift happening within the auction market itself. Basically, the investment demand bubble there, it's popped.
Why?
Because of those strengthened loan regulations from the 627 measures. That whole package designed to cool things down, tighten lending, discourage speculation.
Right.
Well, it worked maybe too well in some ways. It's made it extremely difficult for purely speculative investors to jump into auctions now. They can't get the loans as easily. So the auction market is kind of reorganizing itself. It's shifting towards real demanders like end users, people who actually want to live there, non-homeowners.
Ah, I see. So the speculators are pushed out.
Exactly. And what happens then, you get lower successful bid rates. That Nekshal Gale, the ratio of the winning bid to the appraised value.
Meaning things are selling for less.
Potentially, yes. Homes are going for less, maybe, than they might have a year or two ago in that same auction setting. It creates a real possibility of buying a home you want at a more affordable price. Lee Zhixian, a senior researcher at Zizek Auction, really emphasized this point. As the general market freezes, properties from the Yonggul joke.
The people who borrowed heavily to invest, right?
Yes, exactly. Those properties are now entering the auction market, often at cheaper prices. Lee called it a golden opportunity, specifically for non-homeowners looking to acquire a home.
That's a really critical distinction then about the auction market changing its character, shifting from speculation to genuine demand. It's almost like the market's clearing out some of that speculative froth, leaves opportunities for people looking for an actual home.
Precisely.
It's tough for the Yonggul joke, obviously, but maybe a silver lining for first-time buyers, perhaps?
Yeah.
A sort of bittersweet dynamic playing out?
That's a good way to put it. It's a reorganization driven by policy, creating these entirely new pathways.
Okay, so let's recap this deep dive. We've got potential for significant KOSPI growth, but it seems really contingent on specific policy moves, like easing those inheritance taxes. We have expert confidence in the market holding up. Some definite hot sectors flag Joebang 1, securities, bio, AI, semis, and then this really surprising counterintuitive angle in real estate. The frozen market actually opening doors and options because the demand is shifting from speculative to genuine home buyers.
Yeah.
Creating potentially new avenues for homeownership.
Yeah, in this whole discussion, it raises a really important question, doesn't it? How do these market dynamics, which are clearly driven by policy adjustments, whether it's tax changes or loan rules, how do they create these ripple effects across completely different asset classes? And maybe more importantly for you listening, how can understanding those connections help you navigate your own financial decisions?
Absolutely. Something to really think about. How specific government policies, things that might seem abstract like tax adjustments or loan regulations, can dramatically reshape entire markets. And in doing so, create completely new opportunities even in times that, on the surface, seem pretty challenging. Definitely something to mull over as you think about your next steps.